Did you know that a seasoned investor claimed that Tesla represents a once-in-a-generation opportunity to buy at this price? This may sound cliche now that so many well-known people have said it. It can even seem like a gimmick to get people to buy Tesla shares. Continue to watch and listen to see what Barron has to say about this. The biggest investors are split between supporters and detractors of the top EV manufacturer. As Tesla is currently called, renowned investor Ron Barron is well known for being a Tesla bull. You'll learn why Ron Barron claimed that this is a once-in-a-generation opportunity to acquire Tesla stock at this price in today's video. May saw the highest annualized rate of inflation in almost 40 years at 8.6%. The Federal Reserve raised its benchmark interest rate by 75 basis points as a result, marking the biggest increase since 1994. Economists are predicting a repeat of the late 1970s and early 1980s, when comparable inflation and high interest rates caused market weakness and a severe recession. The combination of high inflation and aggressive tightening action by the central bank sent an already tense stock market to its worst single week since the start of the COVID crisis. Experts have been alerting the public about the possibility of inflation and a worldwide recession. For investors with longer time horizons, the situation might not be as dire. All prices have decreased as a result of the general market downturn, which may present possibilities to purchase premium brands in depreciating industries. The legendary billionaire investor Ron Barron of Barron Capital believes that there is a tremendous once-in-a-generation purchasing opportunity in the current market. The following was posted by Delivering Alpha on Twitter. Ron Barron says this is a once-in-a-generation buying opportunity as stocks tumble into bear market. The CEO and founder of Barron Capital stated in an email to CNBC, "This is a huge once-in-a-generation buying opportunity." The latest sell-off in the major U.S. market indices, which has brought the S&P 500 to its lowest point since late 2020, according to billionaire investor Ron Barron, offers the significant buying opportunity. When considering the economy in the long run, he said, the recent stock market meltdown in the United States may provide Americans a tremendous opportunity. When Barron started Barron Capital in 1982, he contrasted the current state of affairs to that of his early career. He pointed out that another period when markets collapsed occurred in the early 1980s, following an assertive Federal Reserve that was attempting to rein in inflation. He revealed that his two sons, who are now investors as well, have the same opportunity he had when he established Barron Capital, an investment management company based in New York City that is well known for its long-term investment approaches. According to financial content site Seeking Alpha, the most recent bear market began on February 19, 2020, and ended just over 1 month later on March 23. It was primarily caused by the impact of COVID-19. The term bear market is used by Wall Street to describe when the stock market drops by at least 20% for an extended period of time, and typically indicates an economic slump. In 1982, the Dow Jones Industrial fell to 880 during a bear market. The stock market recovered later that year and proceeded to rise throughout 2021, making that bear market the shortest the economy has ever seen at 33 days. The well-known investor contended that the economy of today is supported by a robust technological foundation that has been established over the last several decades, indicating substantial upside potential in the long run. If you haven't already, would you purchase Tesla stock? Post your ideas in the space provided for comments below. Barron cited well-known brands like Tesla as illustrations of the kinds of businesses that might spearhead the upcoming technological revolution. The remarks made by the fund manager came after yet another severe sell-off on Wall Street on Thursday, during which investors became increasingly concerned that the Fed's rate hiking campaign would eventually lead to a recession, causing the S&P 500 to plummet by more than 3% and the Nasdaq to plunge by more than 4%. For the first time since December 2020, the S&P 500 closed below 3,700 in 2022, a decline of more than 23%. Barron may be long-term bullish, but there has been increased anxiety recently about a near-term recession. In general, we're still optimistic. Short-term macro factors such as inflation, oil prices, interest rates, and the conflict between Russia and Ukraine are generally not given much thought. We always have inflation, even if most people don't talk about it. Over the course of my life, inflation has averaged between 4 and 5% annually. That translates to around doubling every 15 or 20 years, approximately every 10 to 12 years, or 7 to 8% annually. The stock market doubles, according to Barron. Interestingly, Barron's prediction focuses more on long-term investments than day trading and echoes a lot of the investors' recommendations regarding the financial advantages of tracking compound interest accumulation. Finding stocks that are poised to rise once the bear market has run its course, even if they are currently down, then becomes crucial for investors. Chief Investment Officer of Defiance ADF's Sylvia Jablonski agrees with Barron. After hearing that inflation had hit a 40-year high, she claimed to feel more upbeat. This is a fantastic chance for future generations. When you look back on this, it will all be noise, Jablonski said on CNBC's Squawk Box. However, she cautions that investors can expect range-bound volatility in the near future, making the next few months challenging. It's painful, it feels terrible, and we have to ride it out, she stated. How can one make money in the stock market, one may wonder? For almost a century, stock markets have generated wealth for investors. 50 years ago, $10,000 invested in the stock market could have yielded a portfolio valued at hundreds of thousands, if not millions of dollars today. Between 1957 and 1921, stock returns averaged 10.5% a year. Nevertheless, the degree of capital appreciation varies significantly throughout companies. The term CAGR, or compound annual growth rate, refers to this annual rate of 10.5%. There are various ways to invest in the stock market, even though it has historically been one of the best ways to increase wealth. Generally speaking, investors have two options for making money in the market. First, you should purchase and hold. Historically, the purchase and hold strategy has led to the capital invested growing exponentially. By using this method, investors can profit from both income and capital appreciation. The difference between a stock or mutual fund's market price and acquisition costs is known as capital appreciation. Until the trade is realized, capital appreciation is not subject to taxes. After that, it is known as capital gains. Conversely, dividends represent yet another important means by which stockholders are compensated for their purchases and holdings. Dividends are recurring sums of money that businesses give to their shareholders. When a business makes money, it retains the majority of its profits as retained earnings and distributes the remainder to shareholders in the form of dividends. Apart from the buy and hold approach, investors can profit from trading stocks by utilizing leverage and additional instruments like futures and options. Leveraging their portfolios allows investors to significantly boost trade returns. By utilizing leverage, investors are effectively taking out loans to boost their capital profits. Futures are agreements to purchase or sell a predetermined amount of underlying stock at a future date for a predetermined price. Options are a great way to potentially reduce downside and risk because, unlike futures, where both parties to the contract are required to buy or sell the stock, options give the contract holder the right but not the obligation to buy or sell the underlying share. However, investing entails danger all by itself. There are limitless opportunities, even while there can be innumerable unanticipated threats. It is crucial to remember that you should take your time and thoroughly research the companies you are interested in before making an investment. Short selling is another well-liked financial strategy that traders and hedge funds employ to sell shares they do not own. Short sellers of stocks do so with the expectation that future stock prices would decline. Consequently, they would borrow the stock from brokers and sell it today in order to purchase it back later at a reduced price. An investor will profit if the stock price drops in the future since they will be able to keep the difference between the purchase and sale prices. Tesla offers opportunities as well as threats. Check out our other videos on our channel for more information about Tesla stocks.